Joining me now is Bank of America CEO Brian Moynihan. Brian, I'm going to start with something that's a little atraditional from our point of view, but I'm going anyway. Congratulations on a great quarter.
Oh, thank you, Jim. It's good to see you again.
Okay, so Brian, one of the things that's happened is that their net interest income, which I know is one of these lines that maybe the investors, the home gamers may not know, but it's so important for banking earnings. We're really extraordinary for you, and you actually called the bottom. Could you please explain to people how important this was to your earnings? And the forecast has got to be good just because of what you talked about with NII.
Yeah, so if you think about our $25 billion of revenue, nearly $14 billion of it is NII, or net interest income. That's the difference between the deposits our customers entrust to us and the loans we make and the investments we make. And that number, we feel, bottomed this quarter. You've had a massive change in interest rates that are now settled in, and we can talk about the economy a little bit more later. But that massive rate, that massive increase, is now settled in. Deposit pricing is stabilized. Deposit balance has been growing the last several quarters. And that gives us confidence when you do some simple adjustments from now, the second quarter to the fourth quarter. We told our investors today and put in our documentation that our estimate for the fourth quarter is $14.5 billion, which is an increase of $600 billion per quarter over a couple of quarters, which shows the balance sheet kind of starting to generate earnings again. And that has been a period of where we've been coming down a slope, but now we're starting to go up the slope, and that provides great earnings momentum for the company.
At the same time, Brian, one of the things that should have happened at this point with a vicious rate hike cycle is I would have expected a lot of defaults. It's kind of the opposite. In particular, your commercial real estate makes me feel much more confident about our country because you are the biggest in our country.
Yeah, in a commercial office space, our commercial real estate exposure is $60-70 billion, 6% of our loans, but our office space is $16 billion, is down a couple billion over the last couple 4 or 5 quarters. Charge-offs, non-performers, criticized assets all fell during the quarter. So we aggressively worked on it. We aggressively pushed, as they usually say, the pig through the snake, re-rating, getting new appraisals, and now we're seeing it come down. We expect second half to be lower charge-offs in commercial real estate office than the first half. So we feel good about our position. It was always well secured. LTVs were strong. And there's a lot of work to do in the commercial real estate sectors around the country. But we're seeing the activity in our portfolio, because of the high-quality nature of it, basically work itself through.
Now, I think people should recognize that you are out front in terms of digital and your digital platform. What I think that a lot of banks do is they say that they're using artificial intelligence to make it so that they're more productive, but a lot of them are big hat, no cattle, is what I like to say, Brian. But you are putting your money where your mouth is, and I think your AI business, the way you're using AI is right now already additive. If you can tell us what you're doing with digital and what you're doing with AI, I think it'll explain to people why you have such good expense control.
Yeah, so I think just to put the broad context in, year-over-year our expenses went from $16 billion to $16.3 billion, of which $300 million was really incentive compensation, largely driven by the outperformance on the fee-based side of the company. But going to your broader context, this is not something you can do overnight. 25 years ago, we started deploying, online banking and then mobile banking and the app of the iPhone, and we took off with that. And we're up to 40-odd million checking customers. We have 47 million digital-enabled customers. Even our wealth management business, 75-80% of the activity is digital. More than half our sales in our consumer business are digital each quarter now. The interactions are 3.5 billion times last quarter. People interacted with us digitally. And so you're driving that business, which allows you to maintain that expense base. So we're operating expenses on a quarterly basis about where we did in 2015 or 16. If you think about that, there's been, that's almost 8-9 years of inflation and higher cost and more people and growth and a bigger company, and that's all through the implementation of digital capabilities. What artificial intelligence does is takes that to another level, and we've seen that with the Erica capability we have. It's up to 19 million odd users. They're doing 150, 160, 170 million interactions a quarter. Each one of those would have been a text or a phone call or an email and a direct response, and now it can answer the straightforward questions. And it is a straightforward natural language processing engine, which we developed 10 years ago and put into service 5 or 6 years ago. And it's been growing and growing. And now we've taken that technology and applied it to other places. We think there's great hope for AI on taking models that are built for specific purposes, applying them to our data, then we make sure they're fed right. Applying them on our premises so we make sure they're secure with our customers. And then we can use them to help us do tasks and take work away that teammates would rather not do and replace it with more work they'd rather do. And that's what we're up to.